Hello, it's Mike Williams with Genesis, and I'm sure glad you're spending a few minutes with us today. I hope this keynote presentation brings you great value. We call it Stepping Back, Understanding the Basic Theme of Wealth. First of all, let's get a few thoughts from people who are far more brilliant and have huge track records of building significant amounts of wealth. This is from Peter Lynch. You get recessions, you have stock market declines. If you don't understand that's going to happen, then you're not ready. You won't do well in the markets. Look at market fluctuations as your friend rather than your enemy. Profit from folly rather than participate in it. I also like this one. If your goal is to beat the market, an MBA or a PhD from a top business school will be of virtually no help. This keynote is going to focus us all on the benefits derived from patience, discipline, and the ability to understand the predictability of crowds, and this one simple but very difficult to act upon fact about markets. Real wealth, wealth that accumulates and stays over time, more often than not, is derived from understanding this thesis. It is never about what's now. It is almost always about what's next. Understanding this and focusing instead on secular waves of change, which are now dead ahead, helps one to break from the crowd. It helps one to understand what others only begin to see. It helps one miss tech bubbles, housing bubbles, commodity bubbles, and oil bubbles, just as we did for clients. You see, markets are people. It's easy to think markets are something separate. They are some standalone, movable, physical thing. That would be wrong. The function of a market is to provide a basis of exchange, a platform, if you will, to act upon events, data flow, and information, which captures our attention. But most important of all, markets are the place where we act or react based on our opinions of that same data which grabbed our attention. In essence, markets are the result of electrical impulses throttling through our brains at speeds we never recognize until our actions or reactions provide feedback. Feedback, you might be wondering? Please take a few minutes with me and let's step back in time to drive home valuable lessons for today. The public has a decades-long record of being a very poor predictor of the future. In the early 80s, the public was certain our best days are already behind us. On October 20, 1987, the day after the markets crashed 22%, the crowd was certain the future was dark. In the early 90s, as real estate collapsed and banks and S&Ls closed by the hundreds, the public was sure investing in the future was a really bad idea. In the mid-90s, the public was confident another recession was at hand, just before the market decided differently, and it rose instead for 5 straight years. But, and this is key, in 1999, that very same crowd was sure that tech stocks grew to the sky and went all in and then some. Over the next 3 years, their dreams were once again dashed against the rocks as the tech bubble collapsed. The sure bet of the crowd failed them, but as tech failed and prices swooned, the commodity charge, which back in 1998 we stated one should instead focus upon, well, it stormed forward. Oil, copper, housing, all hated and pushed aside, while tech was a sure thing, did not lose money, even as markets swooned. Instead, they were on a different and predictable track, upward. They were becoming the next favorite thing. By 2006, those housing stocks had replaced tech from years before as the next sure thing, and the crowds acted predictably again. We know the result of that now. The key? Markets are people. Short-term events are unpredictable. But stepping back and viewing the mass movement, the secular waves of change, does indeed form a basis of predictability, not from a sense of, quote, knowing what is to come, as too many search for the Holy Grail. Instead, it's more of a sense of predictability or the placing of odds that are more on your side as to the likely outcome of the then current expectations. Think tech in 1999, housing in 2006 to 2007, commodities, oil, China in 2014. All were loved. The certainty of the crowd was so thick you could cut it with a knife. Predictable events were set, odds were set to change, and outcomes were far different than the crowd assumed. Over 33 years of this, I have learned to listen to the crowd. When times become certain, when things become obvious, when the experts are in sync, when media is selling hard, when the easy thing to do is certain, that period represents the key window in time to remember it's never about what's now, and it is almost always about what's next. Today we're being suffocated with fear, angst, and what I like to call the certainty of doom. It is obvious, isn't it? Clearly, we are being overwhelmed with problems, likely unfixable as the crowd feels, likely insurmountable as the experts chime in. It is certain the future is dark, just like it was in 1982, on October 20, 1987, in the early 90s, in the mid-90s, in 2003, in 2008 and 9, and miraculously, now. I say miraculously because while everyone fears everything under the sun, while we fear the next bear market almost daily, while the experts tell us repeatedly just how bad it's going to get, the data show something else. The public is already terrified. This chart will show you that equity fund outflows and selling pressures just recently reached levels not seen since the world's global collapse in 2008 and 2009. Sentiment already stinks. You can see once again we're back to levels we haven't seen in years. Wall Street analysts are already scared too. Fund managers have the highest cash levels since 2009 lows, and in fact, since the tech bubble lows. And yet insiders are setting records in their buying levels as fears skyrocket. Even Warren Buffett has spent over $38 billion on new investments in the last few weeks alone. Please, step back. Quell the urge to leap. Stifle the need to end the pain we all feel with red ink. Instead, listen to the crowd and the all too available mass of experts. The noise levels are increasing, nearing that ever noticeable pitch, the sound of certainty, of assured outcomes, of the obvious nature of things, of what's now. Recognize this instead. Focus upon what's next. Stay tuned. It's going to be far better than we assumed.